Hello, everybody. Thank you, Jimmy. Thank you, Coingeek, and great to see all you people there in Zurich. I was looking forward to being there, but sadly, that wasn't to be. I know Zurich quite well, actually. I spent some time working in RegTech, and there was a fantastically horrible pub there called 10 Drowning Street. I don't know if it's still there. I do hope it is. If it is, it's well worth a visit, but, you know, be safe. That's all I'll say. So, my name is Bainbridge-Clayton. I'm CTO and co-founder of a company called Kompany. And I'm going to talk to you today about RegTech on blockchain, or more precisely, KYB on BSV. Now, I am the CTO, but you'll forgive me if I do a bit of sales and marketing first, just to explain who we are and what we do. Just so you've got some context. Kompany is basically a business information provider. And what we've done, we've built a proprietary network of connections to business registers, banking registers, financial registers, and other things, so that our customers who are regulated and non-regulated can fulfill their KYC and AML checks wherever their customer is in the globe. And they can do that, they can meet their regulatory requirements, and they don't get fined. This is what we're for. We are the people who can make the difference between being fined by regulators, and we know how large those fines can be, and not. Now, just one word of note, I'll use the word regulator a lot. I don't necessarily mean regulators in this case. I'll be talking about anyone that has a legitimate interest in requiring KYC and AML checks to be performed and to be shown to be performed. But I'm going to use regulator as a shorthand for that. But again, we don't only do regulated entities. So, what do? We take data and documents from the primary source. We get it in real time, and we guarantee the data integrity. This is important. One thing we do not do is aggregate data or alter this data. We aggregate access to data. You have to be able to prove that the data you're using is actually genuine. You have to know where it came from, and you have to know when it came from. So relying on static databases for this stuff doesn't actually meet the requirements. A lot of people are getting away with it, but actually it doesn't meet the requirements for KYB and AML. So what have we done to allow this? We've done all the hard work. We've done the hard parts of connectivity. We've built connections to over 200 jurisdictions. We've done the hard parts of payment. You don't have to pay the registers and stuff, you can just pay us. We've done the hard parts of handling different languages. We've done the hard parts of data formatting. When you use our API, you get data in the same format, no matter where that data has come from. And we've added several services on top of this, such as UV discovery, tax number validation, IBAN validation, document translation, data extraction from documents, PEP sanctions checks, etc. In essence, there is no reason not to accept particularly international clients anymore, or to lose them to competitors because the KYB checks are difficult or take too long. This doesn't apply with Kompany. We're here to do all that difficult work for you. Why do we do it? Well, we do it because we're lovely, lovely people, but also we want to save our customers from having to spend too much money, spend too much time, and take too much risk in doing their job. If you don't use us, you might not be doing your KYB and AML checks properly. This can lead to big fines. This can lead to very big fines, and actually it can lead to worse than fines. This can lead to adverse media coverage, and that, of course, leads to reputational damage, none of which anyone wants to have. Certainly not as users. You mitigate those risks, you mitigate that time, you mitigate those costs. So, That's who we are. That's who we do. Sorry, that's what we do. And that's why we do it. Sales pitch over. Now, for those of you still awake, firstly, thank you for sticking it out so far. You will have noticed that actually I haven't used the word blockchain once, apart from on the title slide, and I had to use it. I had no choice. This is very, very deliberate. The reason is that I believe blockchain is best when it's part of a platform, giving service to the end users as part of the whole, not simply a store of value. It's much more than that. And you'll also notice that I didn't mention databases, I didn't mention web servers, I didn't mention protocols, I didn't mention programming languages, all for the same reason. These are components of the system which provides service. The service is what matters. Having said all that, this is CoinGeek, and I'm here to explain what role BSV plays in that system. It would be very rude of me not to do that on BSV, but of course this is the reason we're here, and this is the important part. It's simply because BSV adds capabilities to our platform which simply cannot be done in any reasonable other fashion, if it's even possible to do it at all with any other category of technology. And we refer to this integration of blockchains, in particular BSV, into our platform as KYC on chain. Why? That's the first question. What's the point? What's it giving us? There's no point doing these things if they don't add value. The reason is this. Current KYC and KYB is built on layers of trust. If we look at this diagram, on the outside you have the regulator. Remember, regulator could be an auditor or any other interested party, law enforcement. The regulator relies on our customer to be truthful in what they say. Our customer relies on us to be truthful in what we say we're doing and to give them the data that we retrieve from the register. We rely on the register to be truthful in giving us what they actually have. Now, I'm not saying that we have any reason to doubt that the register isn't being truthful, but still, it's still trust. And lastly, the register itself relies on the company which is filing data or their representatives to be truthful. Okay, simple enough. But this is a problem. This is just trust. This is not truth. It may well be true, but it's not truth in its own right. You can't prove that it's true. So, what I always like to say is, trust is a measure of risk. This is all based on trust, but trust is risk. Trust is a measure of how much risk you are willing to accept that what you are being told is the truth. I do not do marriage guidance counseling anymore for obvious reasons. When I came out with that statement, it probably wouldn't go down too well, and I never did, just as well. So what can we do about this? Well, relatively simple. At its most basic level, we put the interactions with our API onto BSV. We use our lovely partners N-Chain to help us do this. And so the way this works is when our customers use our API, we gather the data together, we hand it off to N-Chain, who act as the interface between us and BSV. They pop it onto the blockchain for us, and they give us back certain components of data, and we can then hand those back to our customer. What does this mean? Well, this combination basically says that we can prove that customer X asked us for information on company Y at time T. And we went to the register at time T, and we got this data back from the register at time T. And we got this document and whatever else is involved in there. It could be just data, it could be documents, it could be a mixture. Doesn't matter. Either way, what we can do, we can put a proof onto BSV that this has happened. And what that does is it means that anyone with a legitimate interest, a regulator, can get the information off-chain. They can do whatever manipulations need to do to validate that what claim is being made is actually what is recorded on-chain. And because it's recorded on-chain, it's immutable, it's locked in time. And interestingly, if we sign what we put on-chain with a certified timestamp, it's legally admissible in any European court and cannot be contested. It's a relatively simple sounding thing, but obviously there's more to it than what it says. But at its essence, this is what we are doing. And this is live currently with friendly users. And I'm sure they're enjoying it. So how does this actually work in practice? This is going to get a bit tech heavy. We'll apologize in advance. So if we start at the top here, our customer makes a request through our API, which is a JSON over REST API. We take that request and we either encrypt it or we hash it. We then go to the appropriate register, which could be in one of these 200 jurisdictions all around the world. We pass the request on to them, they send us a reply, we take that reply, we either encrypt it or hash it. And the reason I say encrypt or hash is because we need the capability for our customers to hand in a public key. So if they want to ensure a bit more security for their requests, they can hand us a key. Otherwise, we'll just use a SHA-256 hash with a given salt. We then take those structures and we build those into a JSON structure, which we then hash again. We hand that off to N-Chain. So N-Chain have no idea what the actual original request was. And that's important because although we were trying to replace trust with truth, obviously that our customers need to trust that we're not handing off their information willy-nilly to anyone, even our good friends N-Chain. N-Chain then pop that onto BSV for us, give us a response. We build the API response, including the reference, and hand it back to the customer. Now, this sounds, quite laborious, but in reality, this is microseconds of time. So, the result of this, there is stored on the blockchain immutable absolute proof of the contents of the request, of the contents of the response, of the time that it was done, and the sequence in which it took place. This is all done whilst maintaining complete secrecy for the customer and the customer's clients. Now, I expect there are two groups of people. There may be more than two groups of people watching this now. Hopefully, the techie types are there going, yeah, that makes sense. That's a really good use of blockchain. We should use these guys. They're fantastic. The less techie types may well be Googling hash or something at the moment. Fear not. This slide is the business-friendly version of that last slide in plain English. Basically, doing these KYB checks and proving it means proving the three Ws. Who, what, and when. Who is for whom the check was made, so which client potentially. What was the response, the actual outcome of this check, and when, obviously, when did that occur? And a regulator is going to ask for those three Ws. Now, pre-KYC on-chain, this involved things like having account history record, this involved things like having log files, this involved, paper documents with times written on them. All good, but not exactly proven. It would be very, very easy to contest any one of those, and they're very hard to actually defend, because it's simple to make log files. It's simple to make documents with timestamps on, because It's just a piece of text. KYC on-chain changes everything. The who and the what and the when are referred to by one single string of hexadecimal numbers. Okay, it's a bit techy, but that's it. There's no log files, there's no paper trail, there's no PDFs, there's none of that. There is one string which you can store in your CRM system, and that's it. We've also built in this method so that you can get access to the entire KYB history for that client. So if you wanted to say, okay, show me everything I've ever done with this client, we'll give you back all of that, all of these references, these one-line texts, and you can then use that to prove the entire history. So, because this is backed by blockchain, you can prove this. It's not a case of trust. And interestingly, you don't even need to do the proof. The regulator themselves can prove it. You can say, as one of our customers, here is what I got, and here is then, and here is the one string which proves it. And the regulator can go away and say, okay, yeah, I can take your string and I can look that up on the chain and I can hash what you claim, and it matches. That's it. Getting this level of assurance is very, very, very difficult, if not plain impossible with any other type of technology. That's my view, and I firmly believe that. Naturally, I expect to be bombarded with counterexamples after this presentation. Now, I just spoke then about an onboarding, periodic checks, this kind of traditional life cycle of clients. But there's a paradigm, in this paradigm, there's an implicit assumption that these things take time and the whole process is laborious. But this isn't actually true anymore, because we do instant KYB checks. By instant, I'm talking, seconds for a slow one. And BSV is so fast, this needn't apply. So this whole paradigm of onboard, transact, monitor, check, offboard is reduced to instant. It's onboard, go, done. So this allows instant onboarding. This allows transactional KYB, real-time transactional KYB performed in a provable, demonstrable, and audit-proof way. This, of course, acts as enabler for things which require this to be done in real time. But one crucial part is that because the proof itself is stored on the chain, this can be handed off to other parties. So if you're VASP and you need to follow the travel rule, it's fine. You use us, you do your KYB, you have it there on chain, you hand off the chain reference to the receiving party. And that's it, you've met the travel rule. Obviously, this applies to things like cross-border payments, particularly cross-border payments. They needn't be cross-border. NFT markets, and that sort. Now, a lot of, especially newer customers, are totally on-chain. And the elephant in the room here is actually that call to the API that still exists. People don't necessarily want to break out from an on-chain flow to be able to go and call an API to get the thing to go back to the chain to then try and tie everything together. So we're covering that by wrapping our API in smart contracts. This means that fully on-chain from start to finish, including KYB checks, recorded KYB checks can be done. And if you think about this, what this actually does is this enables inline or pre-compliance checks by regulators. A regulator can sit there looking at what's going on. They can have a real-time view of things. They can look for suspicious activity in real time. And actually, that builds them the capability of being able to pre-regulate. So this whole thing where you don't know whether something's going to get approved for 6 months can go away. Now, this is obviously some time. The regulators are playing catch up with a lot of this stuff. But this establishes the capability of it. And it also establishes what we call a KYC market. This is a bit blue sky, I will admit. What we've done when we've put all these layers into place, we essentially have a tokenized process and tokenized store of data, which represents a KYC chain. Because this is tokenized, it can be traded. It can be given value. And so this establishes a mechanism whereby a check which is paid for by one party could be sold to another. Now, if they have a different GRC requirement that they can use data which is 6 months old rather than as fresh, fine. They can go and purchase something which someone else has already done. The original payee gets a bit of money back. They may be able to cover some or all of their costs. The new purchaser gets something a bit cheaper. So it's all good. This is where we want to go. And we see this very much as an infrastructure. So we see people like ourselves providing the data, people like N-Chain acting as the interface into blockchains. Blockchains like BSV becoming chain of choice for this sort of thing. And other parties such as credit reference agencies, the customers themselves, so the banks or the financial institutions, large industrials. If we position this as an infrastructure, then everyone can actually be part of it and everyone can benefit from it. So, thank you for listening. I hope I've explained what we do, how we do it, why we do it, and particularly why we are using BSV. We think it's definitely the right choice for this. We like the scalability, we like the throughput, we like the speed, we like the block size. And this gives us numerous advantages to our customers. As I said, some of them are already using it in previous trials. And what they are benefiting from mostly is it's kind of like insurance. They are protecting themselves against a future investigation by a regulator on any of their clients who go through this system. And they're also future-proofing themselves against regulatory change, because the capabilities of this system far exceed the currently applied regulations. Not necessarily the way it's written, because the way the regulations are written isn't exactly the way they are applied. But this system meets the way they're written and the way they could be applied in future. So they're protected from regulatory investigations, they're protected from court cases. We believe this is a very, very valid real-world use case for blockchain for regulated and non-regulated industries. I do hope you agree. My name is Peter Bainbridge-Clayton, and it's been my pleasure to present to you today. Thank you.
Reimagine the world's financial system. One built on being simple and fair, not one that's overcomplicated, outdated, and broken, and keeps a quarter of the world's population from accessing it. Reimagine your own finances. Do you have full visibility and control of your assets and investments? We believe there's a better way, a new future for financial services. One built on equal opportunity, where possibilities are limitless, not limited, and everyone can live the life to which they aspire. At Fabric, we're weaving a better future of finance for the billions locked out and the billions locked in. A safe, open, and fully transparent financial ecosystem built on innovative technology, where anyone can transform, hold, trade, and grow their assets, all in one accessible place. But this journey isn't ours to take alone. Are you ready to join in? To reimagine a better future with us? Where everything is digital and anything is possible. Fabric. Reimagine prosperity.